Hi guys, thanks for tuning into another episode of Nuggets News. Plenty of big news. We're going to be talking about gold and silver markets, digital IDs, and all the crypto news, how this all ties together with Michael, who's our head of research over on the platform. So don't forget you can sign up for that free newsletter, all our research or our high net worth services. And wow, what a wild time to be alive with this parabolic gold and silver runs and crypto as well.
Yeah, it's we've seen some pretty like crazy stuff, which I think a lot of gold speculators have been expecting for a long time. Lines at the doors all over the world chasing the gold price.
Yeah, and I did that video the other day as we saw those lines around the corner talking about how the crypto gold and silver tokens are a good, quick, easy option. But I said, guys, don't chase parabolic markets. Average in and wait for a dip. And now we've got a 10% dip on gold. But I spoke about that silver that interests me a lot more. That's still a relatively low market cap. The gold to silver ratio only just broken out to all-time highs. So you've got that dip and maybe average in to gold or silver if you haven't got a position yet, because the way the world's heading, I don't think that's a bad place to play defense of your wealth from governments and that sort of thing still.
Yeah, I mean we the same sort of thing. Like it's a natural reaction that like you see that FOMO build up in you when you see a chart of an asset that you really like and it starts to really rip. But then, the sell off is devastating. And so now the narrative I saw in the last 24 hours as I was prepping for the show, watching as much of the sort of mainstream media's take on what they're saying about gold is, biggest gold sell-off in however many years it was. The narrative quickly turns, doesn't it?
Yeah, so hopefully we're going to see a rotation from gold and some of that profit taking from, tens of trillion market cap back into Bitcoin, which is going to be hopefully that next leg higher for crypto markets as well.
Well, speaking of the crypto markets, we've had some more really interesting developments this week because, Larry Fink now talking about what they've been doing with BTC treasury companies to do that as well with gold and silver and US treasury markets. So for those who don't know what the DAT is, the digital asset treasury model, it's effectively somebody is taking over like a zombie company or launching a new company, but generally taking over a zombie company on the stock market that has no use case or no business model, and just taking the shell and then saying the new model for this is we're just going to raise funds and drop a particular asset in it. And so effectively that's what MicroStrategy became. And then we saw the next one obviously came out with Tom Lee and his Ethereum one, but we're about to get a whole bunch more in the next month. They're all about to get approved. XRP, Doge, Solana, Polkadot are all probably likely going to get digital asset treasury companies or DATs approved. But now we're talking that we can do the same thing with gold, silver, and US treasuries. So it's like interesting.
Yeah, and as Dr. Jack Cruz, who's a fantastic follow on Twitter, if you don't follow him, all things health, Bitcoin, and gold and silver related, he's talking about that rotation as well as, that's kind of one of those worries longer term. What if BlackRock has too much control? Are they just going to buy it all up and then crash the markets, or who knows? But for the time being, it looks like they want to keep scooping up as much as possible.
Yeah, well, we saw some more shenanigans that happened in the market as well this week. So we obviously know we've got PYUSD, which is PayPal's stablecoin, and it's sort of run by Paxos, who have got some track record here in the space. But they made a big boo-boo this week where they've tried to transfer 300 million, but they've actually burnt that 300 million. So then they've had to remint that 300 million and accidentally minted 3 trillion stable coins, completely throwing off the peg.
Yeah, 300 trillion, fat finger. And it's kind of funny when you talk about global debt and, people, all sorts of theories going around was, hey, is this minting of the new global CBDC to soak up all the debt and stuff? But it just goes to show how crazy this crypto world is sometimes. And, does that get into circulation? Can these sort of things be hacked and minted? And, it's just wild as these centralized companies are taking control of centralized stablecoins.
And that's a private company that could just created 3 trillion. And obviously that would never have worked because it would completely throw off their peg. Yes. But who knows what sort of shenanigans can be played when people have that ability. Yeah. This is another one that you flagged throughout the week, but carbon credits now getting put onto like packaging of food in the UK.
Yeah, crazy stuff. And we've been talking about this as a coming conspiracy theory with the New World Order and Agenda 2030, but now we're starting to see it in UK supermarkets with your daily carbon allowance. And I think it ties into the next one as well, where UK banks, I think this was NatWest or Bankwest on the next slide, showing you your carbon spending in your bank account. If you've got that next tweet there as well. Oh no, that's all right. I might not have shared that one too, but yeah, basically the banks in the UK are now telling you your carbon spending and how you can start to save and be more carbon wise and all this type of stuff in your banking apps as well as in the supermarket. So obviously this is all tying into prepping us for digital ID, and in Australia with that next tab there. Just again, I've tried to ban cash a few times in Australia over probably the past decade, and it's failed a few times thanks to the work of a lot of people. Martin North, John Adams, myself, people with big followings calling this out and getting petitions signed or whatever. But I think we're about to see another big push, and Jim Chalmers has brought in this cash mandate to allow retailers to start to refuse to accept cash and that type of thing. But yeah, I think the war on cash is really going to heat up as they push us towards digital ID here.
And this is the dark one, isn't it? Because it was always that they had to accept it as it's a officially approved tender. And so now when all of a sudden people can refuse cash, is it even money anymore?
Yeah. And I wonder if they're going to, this is where they start to get into, are they going to start to run these stories or false flags with how cash was used to do bad things? And they have to drum up that sentiment, cause the problem to bring in that new law.
Yeah. Yeah. It's pretty spooky times. And if you're going to have like one particular app and that controls everything, all of your identity and everything like that, I know in Queensland, you've got your driver's license exists on a mobile app now. It's all just drip by drip, just the digitization of us as people.
Yeah.
This is another, I guess, sort of crypto related one, but the Huobi founders raised another $1 billion as part of another Ethereum based trust. And so I know I share a lot of these from week to week about the new big raises and new big L2s and new big whatevers. But I think what it does is it sort of signifies this overarching narrative around, are we actually going to have like another 2-year bear market when there's so many Wall Street dollars that are playing in this space? And especially now people are raising money at these levels. And I'm no doubt we'll have a significant correction and the market will cool at some point. But I don't know that it's going to be as long-lived as maybe what we've had in the past. I think they're going to want to continue to print into infinity. And when you've got these, we're now dealing in the billions, $1 billion for this and $3 billion for that. And, World Liberty Finance, $4 billion on open. Like there's just a lot of money now and a lot of powerful people who are not going to want to see that number go down. And we talk about it in the Australian property market. Will there be a massive property collapse? But I think there's a lot of people waiting for that, but you've got to remember that's the Australian economy right there, toast. If we have this massive property correction, it's either that or we destroy the dollar, the Australian dollar. So I don't know. I'm not saying it can't happen, but there's flow-on effects of the collateral that we denominate everyone's wealth in collapsing in value.
Yeah, and that's when all our data and talking about being risk on, risk off and all that sort of thing really comes into it, of knowing when to sell and when to buy the dips versus this is a dip that you want to get out on a bounce and that type of thing.
Yeah, yep. So interesting one here. So Dankard is like an OG Ethereum guy. He's announced that he's joining Tempo, which is this new sort of L1 that's been launched by Stripe, I believe. And it's interesting that they did not sort of align with that sort of Ethereum L2 narrative, but sort of went out on their own. And so sort of poaching key people out of Ethereum. And then it's led to some interesting sort of stuff in Ethereum this week as well. So this is I forget his name, sorry, but this is an Ethereum researcher and effectively wrote this massive article about how in his however many years, 9 years in Ethereum, all he's done is made something like $600,000, and how you can be such a core protocol player but receive so little compensation for it while there's these astronomical numbers. And Vitalik kind of clapped back and said, well, if people aren't complaining about their salary, you're paying them too much. But the other flow-on effect here is then you've got people like Sandeep, who is the founder of Polygon, kind of wrote this article throughout the week saying, well, maybe Polygon needs to leave Ethereum as well because we're not getting the love that we want and we're not valued as high as I want us to be valued as. So a bit of drama this week in the Ethereum landscape.
Yeah, and it all stems from this lack of focus from decentralization and privacy and all the things that these builders initially set out to do. And this is one thing that we've spoken about a lot, that ETH had lost its direction and we saw a bit of excitement. But once again, that new catalyst was all from the TradFi world with basically treasuries and stuff. It wasn't from, hey, we're going to really start building out good new tech and apps and this type of stuff. And so that's where I'm still hopeful that maybe it's going to take digital ID and all this type of crap that they're going to start to push really hard for people to go, hey, we need a decentralized internet, just like what we saw with AWS when it crashed the other day. And a lot of the crypto sites, a lot of the crypto apps, half the internet stopped working and people realize, wow, one company, AWS, can have an error and break down the whole internet. This is the whole reason why we set out to build a decentralized internet, and we've strayed away from that. So that's my big rant about where I want to see us pick up and go back towards the initial cypherpunk vision of what crypto could be.
Yep. And these are the comments right here. So you're exactly right. It's now monetary based. It's now not happy that my market cap is as big as I wanted it to be. Speaking of which, so for those who have used Echo before, I think we mentioned Echo quite some time ago here. It was actually a very cool platform. So it's a decentralized way of raising capital where you can make almost like a cohort of, you make like a VC, except it's a DAO of investors. And so there, for example, could be like the Nuggets News DAO. And it's a group of people that all come together and you share deals with each other. And so anyone who's looking to raise money can be accepted. The due diligence gets done by the DAO, and then that collective can all invest into a particular project. And there's been some big projects like Mega ETH and Plasma who have all raised some pretty big money on Echo. And just this week, Coinbase decided to acquire it for $375 million. So now this platform, which has raised billions of dollars for projects just in the last 2 years, is now owned by Coinbase, which is a really interesting move that Coinbase is now in the space of decentralized fundraising. So you can see that that's that vertical integration that they're looking for more of the pie, more of the tech of the stack. But Echo is a very cool platform. And it was actually built by one of the OGs in this space, Kobe, who used to be known as Crypto Cobain. He's been around for a long time. And as part of this acquisition, for those that don't know, Kobe used to have a podcast on YouTube called Up Only. And then he kind of just went dark a couple of years ago and put out this NFT and said, if someone buys this NFT and burns it for $25 million, we'll come back and do 8 episodes of Up Only. And as part of this purchase, Coinbase has bought this NFT. So
nice
marketing play, probably. But $25 million for 8 podcast episodes.
Yeah, happy days.
Yeah. So yeah, he's now well and truly like a rock star in this space, that's for sure, Kobe. And I actually do like his takes. I think he actually is quite leveled in a lot of things. But yeah, big purchase this week. This was just another, again, you've already touched on this, but this was the AWS outage, just the fact that the devastation that happened. We've already covered it, you've already mentioned it. But yeah, just to show that there are actually protocols out there who are focusing on this, having blockchain be the front end that hosts websites as well. And traditionally, they've not been the bullish chart type projects. And I've mentioned them quite several times here before, but this is the whole thesis of the internet computer. And so if you look at the ICP token, it is absolutely horrific. It is a chart that you would not want to get involved with. But the whole thesis of what they were trying to do is you've got this network of data centers and that they would actually host the front end of websites and the full stack would be on chain. And you can argue whether or not that chain is as decentralized as you want it to be. But that was the mission of what they were trying to do. I know Polkadot's doing the same thing right now with Polkadot Cloud, that you can actually host things on the front end. And really, I think this was the original Ethereum ethos. And so I'm looking for some big Ethereum players to pivot towards this before it actually gets adopted. Yeah. But things like Filecoin and, these were the things back in the day where we were going to be able to host all of our data on chain, where we've kind of strayed from that for financial products.
Exactly. So let's hope we get back to all of that. Well, guys, another fantastic episode. Thanks again, Michael. And don't forget to head over to the website for the free newsletter. You can sign up for our platform and all our research and data, or our high net worth services, as we continue to focus more, Michael, on privacy, protecting your wealth, and all that stuff as well going into next year. Really excited to do more of that. Cheers, guys.